So one of the biggest threats to a functioning market is insider trading. When some market participants get special access to information, they can use it to take advantage of everyone else. It is cheating, plain and simple, and it is illegal. Even so, it happens. We've talked a lot today about one kind of market participant, and that is company executives who trade stock based on secret information they have about their businesses. But it can happen in other ways too. Sometimes a high-ranking government official might know about a change in government policy that can powerfully affect a corporation. Professor Jackson, you are one of the nation's top experts on insider trading, so let me run through some examples with you. If an official, let's say a member of Congress, learned that the federal government was about to award a company a huge new contract, and then that senator bought stock in that company before news of that contract was made public, could that be considered insider trading?
Yes, Senator, it could.
Okay, let's try another one. What about if that member of Congress attended a top secret briefing and learned that a company was facing big legal trouble? Could selling their stock before that company made that information public be considered insider trading?
Yes, Senator, it could.
Okay, and what if that member learned in a closed committee meeting of plans to boost the Pentagon's budget by tens of billions of dollars? If that member bought defense stock generally ahead of the markup, could that be considered insider trading?
Yes, Senator, it could.
Let's do one more. What if that member held drug company stocks and learned from their committee chair that legislation to cut drug prices would be moving in the committee? And if they sold those stocks, could that be considered insider trading?
Yes, Senator, it could.
So members of Congress are in a unique position to obtain information that they can use to game the stock market. In fact, the risks with government officials are even higher than they are with most CEOs, because government officials can sometimes use their positions to influence private outcomes and the values of the stocks that they hold or trade. For example, voting on laws that would protect or break up a giant tech company could have a direct impact on the wealth of a member of Congress who holds stock in giant tech companies. So look, this isn't a hypothetical problem. Last year alone, members of Congress and their spouses traded more than $500 million of stocks and other investments. And here's the most alarming part. On average, members of Congress came out ahead of the S&P 500. And yet, not one single member was criminally charged with insider trading. Now, there's no doubt in my mind that members of Congress who break federal laws by engaging in insider trading should be criminally prosecuted. But there's also no doubt that's not enough to fix the problem. That's already the law. So let me ask you, Professor Jackson, do we need stronger rules to prevent insider trading in the halls of Congress?
Yes, this is critical, Senator. When members are in the business of making decisions that can affect companies at the same time that they have portfolios that could include those very companies, there's a risk of a conflict. And we absolutely need rules to address this, Senator.
Thank you. And Professor Coffey, you are also one of the country's leading experts in the area of insider trading. Would you like to weigh in on this?
Well, I think Professor Jackson was basically relying on the Stock Act, which is a very specific statute. I would point out that with respect to Section 16 here, if this was someone other than a congressman or a person covered by the Stock Act, it might be impossible to prosecute them because there would be no personal benefit paid for the information. And then you would not be liable under this proposed Section 16 with its personal benefit rule. But in terms of the broader question you asked, I think you might be suggesting that we should move beyond the criminal law, which is always a blunt sword that can only be occasionally applied, and have Congress impose upon itself some prophylactic rules. It may be Congress should only invest in diversified portfolios like mutual funds and not own individual stocks. I've heard that idea has been suggested in these halls. I think it's a very good idea.
Thank you very much, Professor Coffey. You know, regardless of how trustworthy members of Congress might be, Trading in individual stocks undermines public confidence in the markets, and it undermines public confidence in Congress. And this is why, as Professor Coffey delicately alludes, I've introduced bipartisan legislation with Senator Daines, who is also a member of this committee, to ban members of Congress from owning or trading individual stocks. They can still do the big mutual funds, but not individual stocks. We need to change the rules so that it is 100% clear that members of Congress are not going to be allowed to game the system. Mr. Chairman, I know that you have introduced legislation to achieve a similar goal, and I look forward to working with you and working on a bipartisan basis. We need to get this done.